investors and traders. Today we'll speak about Tesla stock, one of the interesting investment ideas for the next year. Now the correction is Tesla is about 50-60% from the beginning of the year. Let's check its performance. Yes, performance year to date is about 67%, so very tough correction in Tesla. So let's start with the technical analysis using the Elliott wave. So in my mind here it's expanding clinic diagonal. It was the first wave, the second, the third, the fourth and the fifth. But it's just the part of ABC move. In my mind we are near the finishing of wave A, and then I'm expecting a bounce from this point. It will be most probably synchronized with S&P 500 index. It may be the wave B. By the way, I can tell you the target of this wave B. Usually it takes about 30-60% from wave A. So in this case, it can be these levels. So it's the target for wave B in this bounce. So in this case, we have a nice potential to see grow about 60-70% in the next year. By the way, using the RSI, momentum indicator, we can see that in the daily standpoint we are oversold is about 20. The weekly time frame tells the same situation, that we are very oversold at this stock. So last year we saw such low RSI. It was the where it was, let me see, it was the May 19. Even on the COVID crisis it was lower, it was higher, it was 44. So now I think it's not a bad time to at least add Tesla to the watch list. And let's check the fundamental parameters of Tesla. We can see that its total score 79, quite a high score. The financial stability, debt to EBITDA ratio is less than 1, very high interest coverage, and Alpha Z score very impressive. So any problems with debt, with leverage for this company, the profitability, the marginality, gross margin 26, net margin about 15, ROE, return on equity is by the way 33. So very nice figures we have. We can see that last 3-year revenue growth is 23%, the EBITDA growth is impressive 67%, and the future forecast for the EPS net income is about 22%, and revenue also 25%. So very high expectations. Now, by the way, the P ratio is 36, but forward 23. I remind you that maybe a few years ago it was about 100, so now the P ratio is more comfortable. And by the way, PS, price per share, is less than 6. So all the evaluations of this stock now became very severe. If we will check the liquidity ratio, current ratio, quick ratio, both of them higher than 1, so it's a good sign that the company has no debt, has no problems in the near term. And let's check here. There is a nice picture, the business model of Tesla. We can see that its total revenue for the last year was $53 billion, the gross marginality 25%, but here it's important to see that SG&A, sale and general administrative, and the R&Ds account very small amount, a very small portion of its expenses. So the companies continue from the company from the gross profit of 25 continue to have net income more than 10. So for me it's good figures. and its revenues. So automotive segment is about is more than 19%, and the energy generation storage about 5%. By the way, there is a very tough market, the EV market, a lot of competitors for Tesla. Most of them came from China. We know such cars like NIO, like Liaft, and other cheap EV car makers from China. But the main market for Tesla, of course, it continued to be US. It's more than 44%. The China account about 1/4, and other countries, other markets is about 30%. So of course that the Chinese market is high competitive market, but I think that Tesla have enough consumers in US, in Canada, and in other European countries. So coming back once again to the chart, what I think about Tesla, that of course there is side momentum telling us we already oversold. The correction from its high levels, yes, now is about 70%, so why not? You can buy a nice stock, profitable stock with a nice discount. And also, by the way, let's check its PS ratio for the last years. We can see that PS ratio here, when it show impressive here once again. Tesla in 2018 and the COVID crisis, yeah, all this 20 from the March lows of 20, all the year from 20 to 21, yeah, showed us a nice growth about 1000%, yeah, it was in 1 year. And let's check it values. Yeah, it was here. PS ratio was 11 to even 25, 16, 24. Now it's P ratio only 5. So why not? I think that the evaluation now is quite comfortable to consider the stock. It's oversold, and of course Tesla still continue to be one of the most popular and one of the most tradable stocks in the US market. So all these reasons telling me that at least a few shares of this stock I should add to my portfolio, my ideal portfolio for the next year. Of course, I'm a dividend investor. I like dividend stocks, but also I like oversold stocks after correction, and usually most of them I'm expecting to showing net income and not problems with that, like Tesla. We saw at the beginning of the video that its ratio of debt to EBITDA is less than 1, so any problems with operating income with that for this company. So I have a lot of videos about dividend stocks, stock market analysis, fundamental analysis, technical analysis. So don't forget to subscribe, and see you on the next time. Bye.